Good evening, ma'am. One second, ma'am. Yeah,
Is this a student session or a member session, sir?
both, ma'am. Actually, both members are also there because we are exhausted the limit of VCMs in this month, ma'am. So we are taken the shelter of this Board of Studies Operations Skill Development Board, Jaicharya sir, and he has accepted the things, and we have opened the same to the members also.
Oh,
So
okay. Because I
there
have
is a
basically prepared for
60%.
a student. I have prepared for a
Actually,
student's presentation. I
no
was
issue.
not aware. Anyway,
Yes,
it's
no issue, ma'am. Even we never treated the students as a separate part. They are the integral part, as you know that, as you teach us always to us. So, no
no
issue, ma'am.
problem. No problem. No, it's just that the standard will be a little for the student level. So that's
Yeah,
okay.
no issue, ma'am. There is no issue, absolutely, because it is the program that is designed only for the students only.
Sure,
But
sir.
we are offered to the members also for the Vijayawada members. Mm.
Sure, sir. Sure,
So,
sir.
with your kind permission, shall we start the session, ma'am?
Yes, sir. Yes, sir.
Okay. Thank you. Very good morning, ladies and gentlemen. Respected past Central Council member, our beloved friend of our branch, Sri Priya Kumar ma'am. Welcome to this today's webinar on tax audit, mainly on the treating on the tax documentation part and also tax planning, how to do the tax audit planning structure. If possible, a little bit on the standards on auditing, account standards. That is the main crux. Actually, we thought of conducting with ma'am very first day itself because of other things, and also later it is COVID, that is not is Karwa or something like that. Chennai
Nivar.
Tufan, that Nivar, that is stopped us. And now that on the sunny evening, we are just refreshing you on the tax audit, the most important part of the tax audit, that is documentation and also tax audit planning. And without wasting much of your time, I just introduce the ma'am to you all. Basically, very first. Okay, Shripya ma'am is a senior partner in SPR and Co. Is a fellow chartered accountant, a practicing chartered accountant by profession, and a managing partner of SPR and Co. Chartered accountants. Shripya ma'am was until recently, very recently, an elected member of the Central Council, member of the Institute of Chartered Accountants of India, an apex body that regulates the profession of chartered accountants. She is also a registered insolvency professional. If you look at the skills of ma'am, she's a fast learner. She consistently demonstrated the ability to gain quick insights into the academic and practical situations. Also possesses an excellent interpersonal and communication presentation skills. Coming to the education, a graduate from commerce, completed her articleship from the training of articleship training from Pricewaterhouse, Chennai. She has an excellent academic record, including country top scores at school level and also ranks in CA examinations. She is well versed with the contemporary technologies of the systems. Coming to the experience part, she worked in Ford India Limited and also PricewaterhouseCoopers before commencing chartered accountant practice in 2001 in SPR. SPR and Co. Is a new generation practicing services that reputed clientele large in risk, IT consultation, consulting, corporate laws and foreign trades, advisory domains, and endeavors to the exercise the original thought that put client needs the first. She is the registered insolvency professional, specializes in forensic audit. My dear members and students, kindly observe the criticality of the areas that she has chosen for the practice. IT consulting largely in risk, corporate laws, foreign trade, advisory domains. These are all the not the things that are regularly what we are doing the tax audit or the corporate audits. Definitely not, because even this fractal tax audit purpose also, ma'am rejected the saying that I am not the well versed with the tax audit rules and all these things. But I sincerely requested ma'am about the planning part, how we have to plan the tax audit domains, and also a documentation part. Day to day, it is happening that every time if you do the tax audit of a small concerns like contractors, and they throw away the form number 26 years in front of us. They asked us to prepare the books. They asked us to do this. In this type of things, documentation becomes very, very difficult. So I requested ma'am, because ma'am has taken a lot of documentation part in the internal audit and bank audits and other so many audits. She prepared the bank audit scheduling, planning, and documentation part really excellent. So basing taking a clue from that, why don't I try for the documentation part of the tax audit? I insisted ma'am on that. So that is the thing. And coming to the academics and training, Sri Priya ma'am has actively involved in the training of various areas of the financial reporting, audit, and companies, and also addressed forums of chartered accountants, industry bodies, and such as CAI, NASCAM, as well as the staff training college office of the CNDAG. She has addressed over 200 sessions at ICA and platforms elsewhere. She has been passionate about the information technology in training initiatives and has helped launch ICA learning management system for emerging insolvency professionals in India, which has a record number of 8,000 plus users with over 1,40,000 tests has been taken till date. So coming to the board membership, she has served on the boards of the companies of the reputed groups such as Repco and Indian Bank, and also a nominee director of ICI in the Accounting Research Foundation and XBRL India Limited. She has been involved in the execution of R&D projects for government-owned enterprises such as Indian Railways, Tamil Nadu Civil Supplies and Corporation. She administered a first of its kind knowledge sharing initiative, a smart CA. I think most of you are being the members of that WhatsApp group or the Telegram group, the Smart CA, where the firm supports professional endeavors like small and medium practitioners of the profession in the form of ready-to-use knowledge register repositories and practice kits with overall reach of the 10,000 chartered accountants across India, across the country. My dear young budding chartered accountants, they are very much benefited by the all that material supported by the Smart CA group. I'm also one of the beneficiary for the Smart CA group. This is also supplemented with an app that is the Smart CA. And coming to the role in ICA, she was the member of the Southern India Regional Council for the year 2013 and 16, and presently elected to the Central Council for the term 2016 and 19. She is the fourth lady member to occupy this position in the 70-year history of the institute. Mind you, my dear friends, ma'am definitely going to be the president of Institute of Chartered Accountants of India in near future. She is definitely come back with great vigor in the next elections. I presume, I don't know, I don't spoken to her anything about that, but my personal presumption, and she will become the first lady president to our institute. We all pray the God to do it happen like that. She has served the following committees of ICA, namely Executive Committee and the Management Committee. Examinations Committee, very, very important committee, because since last 1 week, we are suffering a lot because of the COVID and other problems in the examination committee. She has executed the examination company in par level excellence, and the corporate laws committee, and also convener of the insolvency code group expert advisory committee, and also chairman of the CPE committee, and instrumental in enabling the web-based CPE learning systems for the ICAA. Coming to the hobbies, avid reader, traveling blogger, Indian mythology and soft skill trainer. And ma'am came to Vijayawada thrice, and she's very fond of our branch, and really very much appreciated by the infrastructure that what we are having, and really a good fan of our Vijayawada branch. So with this, because I had taken the time only for the budding chartered accountants, young students to grow up to the level. We know the Abdul Kalam from the place Chennai, near place where he think big, do big, dream big. This is the ideology. This we also organized a very good program on the birthday of the Abdul Kalam on the 15th October, as saying under the head Salam Kalam. I request all the chartered accountants and students more particularly take a clue and also follow the ma'am in a clear sense. That's all for the about the ma'am, and over to ma'am for the doing the rest of the things. Ma'am, please.
So here's a very, very hearty good evening to all of you, and especially to the chairman, Srinivas Rao Garu. Thank you very much for this very, very generous introduction. Sometimes I just don't know if I deserve it. More than anything else, I am very honored and very, very privileged. In fact, as Srinivas Rao Garu said, I was very reluctant when he said tax audit. I said, sir, Companies Act is okay, insolvency is okay, and audit accounting standards are okay. So I'm not actually a tax person. But he said, why don't you, he's got another 4 expert sessions where I also went through. You had Gururaj ji and others. So I presume the basics of tax audit are well enshrined. In fact, I can learn tax audit from you because I don't know much. But I thought I'll walk you on what is the current standard on documentation, etc. And some general risks that I see happening in the landscape today. So, and of course, I've prepared a presentation which I'll walk you through. And at the end of the presentation, I'll show you an Excel sheet. So I've attempted to put most of the clauses in that Excel sheet and how it ought to be filled up by your article assistants who are doing the audit. So that's actually your documentation checklist. I'll just take a minute. Yeah. So I hope I'm clearly audible.
Perfect, ma'am. Perfect.
Okay. So I'll show you the 2 things I have. One is, of course, the presentation. The other is an Excel template where I put it clause by clause. You may just check for some new clause inclusions, exclusions, etc. How you go and audit each clause. So again, this I will send it to you, but please do take care to include or exclude clauses. I mean, what I've kept this as a standard template. So it may include tax audit of previous years also. So the old clauses may also be there because if it's that period, then the report has to be furnished in that 3CD. So I've not deleted anything. So you may use only the relevant pages. Coming to the core, which is my presentation here. And of course, it's Vijayawada. I have more than just a small connection. I mean, my son took his exam-oriented coaching actually from Vijayawada. So I was at Guntur, and I owe it all to the goddess at Vijayawada. Every day, when my son was writing the exam, I either went to the Kanakadurga temple or I went to, he took his exams in Guntur actually. So, or I would go to the Panaga Narasimha temple, and then, so just to tell you all that CA is as much about effort as it's about prayers. So I have more than a very strong emotional connect to the place and the temple. So coming to the first part of the presentation. So I've broadly done something like this. I've tried to walk you through the documentation standard. So that's your standard on auditing, which I thought is very, very important for all of us to sort of appreciate. Now, before I actually go and talk about tax audit documentation, etc., I just want to talk to you about some risks that I'm seeing in the environment today. A lot of us audit these small and mid-sized companies. I don't know how many of you are aware that the MCA has actually struck off 6 lakh companies from their database. out of the 18 to 19 lakh companies. And those are for non-filing returns. So when you're doing this audit, tax audit or statutory audit or any audit for that matter, please be extremely sensitive that your client itself could be a strike-off entity, or any of the contractual counterparties of your clients. Could be a supplier, a customer, or it could be a person who's taken a loan, or you have taken a loan, your client has taken a loan. So wherever there is a corporate reference in the financials and where the amounts are material, please take care to ensure that those entities actually exist and they've not been struck off from MCA. That's becoming a huge kind of exposure today. So today, just imagine you've done the audit for a struck off entity. 2 directors have signed. They will not even inform you that it's struck off because the information has not yet gone to the bank. Your whole audit process stands vitiated. Because if your directors are disqualified because of a strike off, then they're not at all eligible to sign. So please be extremely careful on this aspect, both in your corporate audits as well as in your tax audits. Now, that's one thing. And secondly, I think there is a huge change in the landscape in terms of auditors' perception. In fact, I don't know if any of you have read this. The last 3 days, there was a very, very interesting set of articles, I think in the Financial Express, by somebody called Mr. Prithvi Haldia of Prime Database. He spoke about independent directors. I think it's an absolutely must-read article. Very similar to that article, I think somebody must try and write on the role of auditors. I find that today the market perception of an auditor is completely different. And whether you like it or not, and whether we operate under a certain framework, nobody seems to understand all that. If there's an issue, somebody says, okay, so who's the auditor? I mean, just look at the country today, the kind of ecosystem that has been. The credit rating agencies have failed, the managements have failed, the bankers have failed. Why aren't they really being hauled up is a second issue. But largely, as an auditor, the reason why I'm saying this is because I think we need to be extremely careful in the work that we do. So these are the two important things. And of course, COVID makes a huge change in the way your access to data and information is extremely constrained because of COVID. But you can't compromise on your audit. So obviously there is a challenge there. And these are the three main things: the strike-off companies, the market perception and the risks you as an auditor are exposed to, and 3 is this particular COVID-related situation and access to books and records. So it's in that context that for the first 45 minutes, perhaps I'll focus on what is all this documentation all about. And the next half an hour, we'll focus on those Excel spreadsheets. Those Excel spreadsheets are sort of, modular. You can increase it, you can decrease it, you can use it as a document, you can create backups to it. So it's like, you can divide this Excel spreadsheet and give it to your articles. 3 clauses per article or something, and use it as a modular audit program. So what are we talking about here? See, very often we treat statutory audits very differently from the way we treat tax audits. But if you look at it, I think tax audits are a much larger risk than your statutory audits. Statutory audit is only true and fair. Tax audit is true and correct. 1. 2, see, the form 3CD, which is essentially prepared, is your client's submission. You are primarily going to do an audit and report under it. Very similar to the financial statements being prepared by the management and you auditing and expressing an opinion thereon. So while your SA 230 is largely, it's for all assurance engagements, and I want to just highlight this SA 230 and how you can customize SA 230 to a tax audit situation. What is the kind of documentation expectation? Designing and implementing checklists, and it says company audits, it's actually tax audits 2020. So what is a tax audit? It's an audit wherein you're required to express a true and correct opinion on a tax audit form, which has some 34, 35, 36 clauses. And says that these clauses are right? It's the management. The management says, yes, there is no transaction falling under this category. The management says, all my tax deductions at source have been done correctly. The management says my PF remittances have been done on time. The management says, no, there are no disallowances there under these clauses. The management talks about its property transaction. By management, I mean the assessee. The assessee makes certain assertions about the various clauses that are contained in the tax audit report, and you as an auditor merely express an opinion on whether what is contained in the clauses is true and correct. And a true and correct opinion or certification certainly demands a much, much higher level of care, concern, and most importantly, documentation. So how do you confirm? So the management comes and says, this is my assertion. This is pretty much like somebody being the father of a boy coming and telling the father of the bride that, okay, my son is so-and-so, so-and-so. He's this tall, he studied so much, he makes so much money, he lives in India or abroad. These are his habits. So that's an assertion. Similarly, see, these are the fundamental principles in auditing. It doesn't matter whether you do a royalty certification, a statutory audit, or a tax audit, or a VAT audit, or a GST audit. The fundamental principles remain the same. A, what is the opinion that you're presenting? Is it true and fair, or is it true and correct? Two, what are you presenting the opinion on? In the case of tax audit, it is on the tax audit form that you're presenting an opinion. If it's a statutory audit, it's on the financial statements of an entity that you're presenting an opinion. There are base assertions. So today, when they give you an EPCG statement, the management is saying, oh, all these exports I did under my EPCG license. That is the assertion made by the management. You as an auditor, check whether these assertions are indeed true and you present an opinion. So in tax audit, each of your clause is an assertion. Your management asserts and says, these are all what I have done. Yes, this is my stock, this is my turnover, this is my this is my that. As we go through every page, we'll understand that better. And as an auditor, how do you confirm that these assertions that are made in the various clauses are true and correct? By performing audit procedures. Now, you've performed audit procedures. If you very carefully see the definition of auditing also, it is as much information and explanation as it is books and records, right? You say on the basis of books, records, information, and explanation that you perform, you prepare an opinion. So audit evidence. So what is very important is today as an auditor, can you say, yeah, I checked it. Everything was okay. So I signed my tax audit report. No. Audit is a qualitative process. So somebody said you have to put some signs into this. See, I'm making an opinion. Everything can't be in my head. I need to have evidence. So why do I do this? Because I need to build audit evidence. Because audit evidence is what will hold my process good. See, because all audits are subjective assessments. So based on certain books, records, information, explanation, a belief that no fraud has occurred, and my own auditing standards and accounting standards where applicable, I do an audit and I've given an opinion. Now, what helps me to maintain that opinion is my audit evidence. So going back to the same example, if somebody says, oh, that boy is working in TCS and it's my daughter, I was going to get married to that boy, would I not accumulate evidence? Would I not call and find out whether he's truly working in TCS? That's my audit evidence. And the last part is audit documentation. Where you hold all this audit evidence together is called as audit documentation. Fundamentally, the principles are the same. Even for a tax audit, you will perform compliance procedures, you will perform risk assessment procedures, you will perform substantive audit procedures. Let me give you an example. When do I do a compliance procedure? See, today TDS, I have such a huge company that I'm auditing, 1,000 transactions every month. Now, I will take 10 transactions and check whether the TDS compliance is there. That's my compliance procedure. My substantive procedures. So what is compliance procedure? They just test controls. It's as relevant to a tax audit as it is to a statutory audit. So when I pick up something, I would generally like to take five transactions under each category and make sure that that clause is actually, they have internal controls which will support those clause disclosures. Substantive procedures. Substantive procedures are procedures of transactions and balances, tests of transactions and balances. I do a detailed checking. I have only 100 transactions here for TDS. I have only 200 transactions in my company. So why would I do too much compliance? I'll check the whole thing. I'll check the whole thing. The total value in my tally trial balance is my debits or my credits. I'll get the total schedule and finish it off. That's a substantive procedure. Now, you have your fixed asset register, tax audit, depreciation workings. Those workings you will check. Those are all your substantive procedures. Analytical review procedures. Last year's turnover, this year's turnover. Last year's purchases, this year's purchases. Last year's profit, this year's profit. See, one of the biggest risks in your tax audit is actually transactions escaping assessment. So if somebody is not declared, especially in smaller towns and cities, I think, why smaller towns? I think right across the world, transactions escaping assessment or escaping disclosure are the most important to be very careful about. See, one more thing, why do I need to document? I need to document to make sure that I have asked that question and somebody has given me an answer. I will ask my client, how many bank accounts do you have? Client says, this is my trial balance. There are only 5 bank accounts. So the fact that I have noted and I have taken responsibility only for those 5 bank accounts will be there in my working paper. Now, if he has a 6th bank account, I can go and check his CIBIL and see what are his bank statements, but you don't normally do all that in an audit. So all these audit procedures are those which are prepared to ensure that your tax audit statements are also free from material misstatement. See, although you use the form, the fact true and correct, nothing is really correct. But if there is no material misstatement, you are saved from a problem. Now, these are the procedures that you normally follow. The same thing you will follow. So today, when you speak of a working paper document, you have to note that there is a clause. There is a certain assertion underlying that clause. So what is the management trying to say about that clause? The third is the audit procedure that you will perform. It could be any of these procedures. The fourth is the opinion that you form on that particular clause to say whether it's true and correct. So it's like a four-part matrix. And 5, based on all this matrix, so each clause becomes a particular axis. If my x-axis is the clause, my y-axis is the truth that my client brings out in that clause. My z-axis is the audit procedure that I perform to satisfy myself that the averment made in that particular clause is true. And the a-axis is the result of my audit that gets documented in a working paper. So even in a tax audit, an analytical review is indispensable. Last year's numbers, this year's numbers, most important. Any client going wrong somewhere, it'll throw up in the AR. Observation, inquiry, inspection, confirmation, reperformance and recomputation. These are the generally accepted audit procedures which go into your audit document. And today when somebody is looking at your audit document, the person will develop some kind of a comfort when he sees all these performance steps having been performed. For example, most of the others you would know. What is reperformance and recomputation? Your client has prepared a schedule giving the tax depreciation. You recompute the tax depreciation. That is your reperformance and recomputation. For example, your client gives you the opening block of assets. You check it with the previous year's tax audit report. That is a substantive procedure. So everywhere you will perform these checks and then come into your audit document. So why is documentation very important? See, I think the landscape is not greatly in favor of auditors today. And with the IBC, etc., having come in, the focus on somebody as an audit work has become very different. In fact, I think today, audit as a function, as a profession, is expected more than ever to be conjoined with public responsibility. Uh, I think, and today, unfortunately, in India, you don't have the definition of a public interest entity. Just 1 minute. So you don't have the definition of a public interest entity. But today, if you're doing the tax audit for a client who's got even, let's say, 20, 30 lakhs of bank borrowing, please be very, very careful. I hear a certain sound. I'm just trying to see.
Already muted, ma'am, everyone.
Yeah. No. I think it was my WhatsApp which I had connected. So. Yeah. So today, just imagine. So the very fact that you're going to be a very high chance of exposure, please be very careful. In fact, I keep seeing a lot of chartered accountants certifying net worth certificates, etc. And with UDIN number also these days. So whatever you're doing, please be extremely careful. And whatever I'm walking you through this entire session on documentation is extremely important. See, another reason is when you document, you yourself start asking yourself questions. When you're putting something down, it'll strike you. Oh, have I checked this there? It helps you to commonize across clients also. So imagine a little coin. There is diligence on one side and there is negligence on another side. And I'm talking for an auditor. That thin rim of the coin is nothing but your working paper. See, and we must also remember that audit is done under GAAP, which is generally accepted auditing practices, which give you the benefit of sampling. It says, as an auditor, I have taken a sample, I have checked, it's okay. So how do you demonstrate that you have functioned under GAAP is only by your working papers. See, today one sees innumerable cases where banks have raised issues on concurrent audits, etc. And in all of those, I believe that the auditor has done his job very, very diligently. But in a lot of cases, they are not able to show the working papers. So regardless of however good the quality of your work has been, it's only the working papers that speak for themselves. So written evidence is better than verbal evidence. Auditor obtained evidence is better than client provided evidence. External evidence is better than internal evidence. And all audit evidence is only persuasive and not conclusive, which is why you must put it in a document. And today, what's an audit document? It's not something which you just scribble somewhere and put it out. No, it has to look like a work program. It has to be signed by the person who did the work. It has to be signed by the person who reviewed the work. See, in all this, I also realize there is one small responsibility we have to our article assistants also. So we need to teach them how to work in the best possible manner. Because tomorrow when they go to industry or whether they go to practice, they'd be hugely benefited by it. Now I'll basically talk about a little bit about audit documentation. While fundamentally, we talk about all this in the context of a statutory audit, I think it's extremely important to customize this to how we will handle a tax audit as well. This entire standard is only for audit of financial statements, but I'm saying it's pretty agnostic. Even for a tax audit, you need documentation. So it helps us to maintain an auditor's basis for a conclusion. So each of the clauses in the 3CD, I'm able to conclude as true and correct, or I'm able to conclude as not true and correct because of this reason. That the audit was planned and performed with the essays and applicable legal and regulatory requirements. In this case, the Form 3CD. Accountability, planning, performance, continuing matters, external inspections, etc. See, a lot of times when you do an audit, you're the tax audit for a continuous period of time. Maintaining such kind of documentation helps you to check something for your next year also. It's very, very important. So what is audit documentation? A record of the audit procedures performed, the relevant audit evidence obtained, and conclusions the auditor has reached. Audit file, one or more folders or other storage media in physical or electronic form containing the records that comprise the audit documentation of a specific engagement. See, many of us do 10, 20, 30 tax audits, etc. Please have a system folder for each of these clients. And for each of these clients, have a particular year, one more folder, subfolder. Please store it very well. Today, you can maintain in hard copy or soft copy, whatever is your comfort. But please ensure that these documents are available with you because you need to maintain these for some 7-8 years, as is discussed later. Permanent note file, current note file. See, even for a tax audit client, it's very, very relevant. You will have one brief about the client itself. Who is the client? What are his antecedents? Before you do any work for a tax audit client, please go and Google. You never know whether there has been any raid or something like that on the client, in which case all that you will have to cognize for. A lot of times, based on my experience, I find that litigation is not brought to the attention of the auditor at all. None of our audit reports, which are supposed to disclose pending litigations, are disclosing any of these litigations. Permanent note file, current note file, component-wise working papers. In the case of tax audit, it's not really component-wise, it's clause-wise working papers. See, if it's only a compact client and only 2 of your article assistants are working, you will have two working paper files. Otherwise, if it's a large client and each one is given four clauses or something, you'll have more number of working papers. Here, it's essentially clause-wise working papers. Timely preparation of audit documentation. See, the standard also says normally you're expected to do it in some 60 days or something like that. I dealt with later. Timely basis helps to enhance the quality of the audit. See, it's not that you finish the audit and then you do the document. That's why you have an audit program, which I will show you at the end of this session. Clause by clause, people have to pay attention to detail. If you're talking about a PAN number of the client, make sure the copy of the PAN card is available with you. Let it be certified. To that level of detail, you just need to do it one time. Then you can carry it forward to your next year's working papers. The address of the client, for example. I've seen many statutory audit reports where the address is different from the registered address. If you have a corporate client, then the address as per MCA is different, whereas the address which the chartered accountant is certifying is different. Small things, but please do pay attention. Documentation prepared after the audit work is likely to be less accurate than documentation which is prepared at the time of such work. Now, what constitutes audit documentation in a tax audit scenario? First of all, whatever it is, you need to have an engagement letter. So it can be a combined engagement letter for statutory audit, tax audit, GST audit, etc. But you must have an engagement letter that says you've been engaged to perform the tax audit on this date. What are these contracts? They talk about only 4 things. 1, what is the scope? The scope here is tax audit as required under Income Tax Act 1961. B, what is the roles and responsibility of the client? To provide you the particular form, to provide you all information, explanation, books and records for the audit, and to provide it in a timely manner. What is your responsibility as an auditor? To certify by this date. 4th, what is the consideration? How much is the fee that you're going to make? 5, additional clauses, your confidentiality, non-disclosure, etc. So even if you don't have something, ensure that you have an engagement letter which is agreed to by the client. 2, audit program. You ought to have an audit program. 2 reasons, I explained it to you. 1 is it makes your work simple because 70% will be general for all clients. Only 30% something new. This client may be having scientific research. So that will come in the audit program. So something extra for a client can always be built in. Whatever analysis that you do, whatever issue memorandum. See, the standard also says whatever issues you have, you document it separately and then you're supposed to dispose it. See, as your article assistant or your manager is doing some work, whatever he comes across, let him note it down and present it to your attention. And list of confirmations and representations. Management representation, if you're taking, is very important. Checklists, correspondence. See, every time you write your client an email, you just do a file, file, print, do PDF of the email and put it in that folder. Because all this later on tomorrow, your Outlook may crash, your data will get deleted. All this is record. See, one thing I found is that our documentation for mid-sized and small practices definitely have to be better. I know people who do 10% audit, 90% documentation, 50-50, 70-30. I think today we are at a situation where it's better you do 50% a good audit and spend 50% of your time on documentation. client data as obtained for the audit, and abstract of entity records. Another very important thing is, see, the base submission should come from the client. I do understand with small and medium enterprises, it's very difficult. But as far as possible, ensure that your client understands this form very well to the extent that the data is being provided. Now, the particular standard also says what does not constitute documentation. Superseded drafts of working papers, financial statements, incomplete or preliminary views. So suppose you were exploring one particular tax provision. You made a preliminary note on it and don't keep all that. It's not necessary. Provide copies of documents corrected, typographical errors, duplicates of documents. Oral explanation do not represent adequate support, but may be used to explain or clarify matters. See, another very interesting thing is, maybe this is something I've learned because of my IBC process. I was also pretty lost on this. All your meetings with your clients or your client staff, ask your article assistants to start writing minutes. It's an extremely good practice. So whatever happens, and another thing is, I think all this also helps somewhere because your client understands that you're actually paying a lot of attention to the way you work. So all these verbal discussions, most important, especially in your bank audits, you do that NPA review with the bank manager. A lot of us don't minute it at all. For the next year, please minute it and get him to sign it. It's a very, very strong evidence. So the standard also talks about, why do I need to maintain tax audit documentation? Let's say documentation must be what are the objectives? It should be sufficient and appropriate. If clause number 33 is asking you a particular question, your working papers should answer that particular question to confirm if it is true and correct. That's the objective of the documentation. It's neither necessary nor practical to document every matter considered or a professional judgment, So you need to maintain a balance. See, I know people who print the entire ledger and keep it in the working paper. Why should you do all that? You don't need to do. You got the tally backup, great. Some important big ledgers where you have issues, you get your client to sign and you take that and keep it with you. That's more than enough. The audit, in fact, I think the jury is still out. Nobody really knows today. Look at a system like Tally. It can undergo any kind of transformation. We don't insist on audit logs. What about our ICOFR? There has been very little debate or discourse about why, I'm told in certain countries in the world, the government even prescribes the accounting software. Now here we have a lot of loopholes in the process and yet the auditor is accountable. It's difficult. Which is why I keep coming back to this. The only thing that speaks for what you do is your working paper. And that needs to be very well maintained. So another very interesting thing is, I had mentioned to you, if I'm talking about a tax audit working paper, let's say tomorrow the tax audit department calls you for, let's say, an inquiry or whatever. So he needs to see what you have done. You show him, look, boss, I have an audit program. I have done this amount of checking. I have come to this conclusion. Yes, it's true and correct. That particular, the best way to build these working papers is to assume that somebody will check this work at a later date. So I think that's a very strong thing, and you have to be very skeptical. Just because a client tells you everything is true and correct, it doesn't mean it's true and correct. True and correct is not a matter of representation. True and correct or true and fair is a matter of audit opinion. So one needs to be very careful, especially with all these frauds looming large. Another very interesting thing, I don't know whether the branch has considered this. See, there is a new CARO 2021. Now, till date, the government has not told us whether that CARO is still there or not there. But if you take that CARO, plus you take your statutory audit report, plus you take your ICOFR, I think they've covered every single component of the balance sheet, where you're required to make an express statement on the true and fair position. It's a bit scary. Now, this is the tax audit report that tells me that I have to, this is a new CARO where I'm supposed to say my client has short-term solvency. It is very unheard of. That's nowhere the role of an auditor, right? It says, right? whether my assets which are realizable in the next 1 year are sufficient to pay my liabilities in the next 1 year. You have to give that under Caro today. See, solvency was always an auditor's problem. When I'm certifying a balance sheet, whether my client is solvent or not, I ought to take care. But liquidity was never an auditor's problem. But today's Caro, liquidity is becoming an auditor's problem. Huge, significant changes in the way loans and advances are looked at. Please be very, very careful and cautious. And I would like to speak more on that though, but this is not the forum. But having said that, we're very close to the year end. Please do have a look at Caro 2021. If it doesn't come, well and good. But if it does come, I think we all have a huge amount of work to do. Documentation of significant audit matters in professional judgment. Now, the standard, even for a tax audit, please document what are your key risks. So your client has made disclosures under various clauses. Will I pay the same attention to every clause? No, I won't. What are the big numbers? See, and today, what is a tax audit? So let's go back to the advent of tax audit. Somebody said, oh, an assessing officer can't do so much work. So let's give some part of the work to the chartered accountant so that the assessing officer is benefited. And, I can take it on record and proceed. So the ultimate objective of a tax audit is to ensure that your client has discharged his tax obligations honestly. Now, there could be certain things which are very low value deductions. I don't want to spend so much time on it. So again, it comes back to the question of risk and materiality. So, and materiality and risk often go hand in hand. So where my risks are. So my deductions, for example, they are higher risk elements because I've taken a deduction. If I'm not entitled to it, there is a revenue loss to the government. So matters that give rise to significant risk should be documented. Results of audit procedures indicating that particular clause, wherever I am saying financial statements, that clause could be materially misstatement and to revise the assessment of misstatement. Now, in a tax audit also, I'm just trying to draw a parallel. See, today you have CAM for certain categories of companies, correct? Auditor's report has to give key audit matters. How did I deal with that goodwill adjustment? All material is only for listed companies though. Now, just like that, even in your tax audit, all the most important matters which you as a partner have taken care should feature in the documentation. See, I always look at one thing personally, and more so now as a resolution professional. If I look at this piece of paper after 5 years, I should be able to remember. That is the quality of a good working paper. I should just be able to take it and say, oh yeah, these were my financial statements. This is my Form 3CD. This is the report I issued. Okay, these are my working papers. I'm able to cross-link and understand every single number in my report and my documents. So in that context, oh, it was tax audit 17-18. I've got a query from somebody in 21-22. I should be able to remember. Oh yes, in my tax audit that year, these were the biggest 3 issues, and this is how I handle them. Again, a top-down approach to audit is what is recommended. I need to first understand what I am supposed to do and then drill down to do it. It's not that you go and just pick up 1.5 TDS vouchers and say, okay, TDS is okay. No. Please understand what is the objective of the clause. And as I had mentioned before, audit today is expected more than ever to be conjoined to public interest. Especially in a tax audit certificate that you give, there is a very, very inextricable kind of linkage that you have to the revenue department. You have to make sure that your client has not defrauded the tax authority in that particular clause. This is also very interesting. SA 230 also speaks about an audit completion memorandum. I think however small, let it be even a very small client, if you do all this well and close it, you feel very, very happy. So you may consider it helpful to prepare and retain as part of the audit a simple summary. Here, in fact, I have not encountered this personally, but a lot of people tell me that TRPs will do everything and bring it, and our people sign so many tax audit reports. Please remember, please don't indulge in any of those practices because I don't think it's worth it. Today, I feel the market is so big in terms of very good work that we can do for our clients that if you're not comfortable signing something, My view is very simple. Please don't sign it. It's really okay. And you can't have a situation where the client comes to you on 25th and you take so much personal pressure and sign it on 30th. Not necessary. I think if we retain half our clients and bill twice as much, we'd make the same amount of money with far lesser stress. And today, audit risk is something that you should be very careful. Audit risk is the risk that your audit procedure has failed to detect a material misstatement in Form 3CD. And I think it's extremely heightened in the context of COVID, etc. So please be very careful, and brings me to another very exciting question. Fee. I think there has to be, see, all audit is risk. So there has to be a risk premium attached to your work. And today, as we all know, there is a huge difference between industry and practice. There is absolutely no parity. So my request is the whole market needs to charge much better. So we charge more, do even lesser work, and do very, very good work. See, and one more thing, a client, in fact, I'm told in places like the Middle East, if you go in January or something, the audit fee is higher because everybody, the filing, if you do it off season, it's lower. So maybe things like that also have to evolve. If your client brings his accounts in August and says, okay, finish it for me, it should be a different slab, whereas coming in November. Because nothing can be good, fast, and cheap in the world. If it's good, it can't be fast and cheap. If it is fast, it cannot be good and cheap. If it is cheap, it cannot be good and fast. So please explain this to your clients. So other matters that the standard wants you is, what are the discussions you had? And after the date of the audit, after March 31st, there is something where your clause is getting impacted also. Please take a little care. See, the reason I'm saying this is because you're not able to see my PowerPoint. Are you able to see my PowerPoint, please? Are you able to see the PowerPoint? Okay, thanks. Yeah. So, documentation of discussions of significant matters and minutes of such meetings. Documentation on how inconsistencies have been addressed. Considerations for smaller entities. This is what I told you. And whatever I'm saying is ditto for statutory audit. It's ditto for your tax audit as well. So, documentation on how inconsistencies have been addressed. And if it's a small client for which you're doing, you'll have only 20 pages, 30 pages, but it's okay. Please bunch it, put a bulldog clip or stitch it up, keep it as a working paper. Or you scan all the documents and attach it in your system folder. See, today you have facilities like Dropbox, equivalent, you have Google Docs, whatever. Pay something per annum for all of that, create client folders and maintain everything there. Matters arising after the date, if at all anything is important. Assembly of the final audit file. A lot of this is again SQC1. So forget all that. Exactly what I'm saying, how do I apply 230 to a tax audit? You have to have within 30 days. In statutory audit, they say within 60 days you assemble the file. But for tax audits, please, because you would have also been under pressure for filing, etc. After you finish that, within 30 days, make sure that you put your bunch back together. Please delete and discard superseded documentation. Sort, collate, and cross-reference working papers. Very, very important. Let's say, for example, you have clause 3. Okay, I must hasten to add that I'm getting a few technical queries. I'll send you the written responses after the session is over. I mean, these are, but if it's something I know about, I can share it with you. Things like TDS, I do know. So, but today's session, I'd like you to keep it on documentation rather than the technicality of a tax audit itself. Documenting audit evidence. signing off on the completion checklists in the final assembly process, documenting audit evidence that you have obtained. So for example, if you have clause 13 and you have a bunch for 13, give 13.1, 13.2, 13.3, 13.4, 13.5. They are your working papers for 13. So every clause has to be covered. Please ensure that your people maintain a good document file. Retention of engagement documentation. For statutory audits, 7 years is the recommendation period. It says the retention period for audit engagements ordinarily is no shorter than 7 years from the date of the auditor's report. So your tax audit working papers also need to be maintained for 7 years. Ownership. These documents are the auditor's working papers. If it's statutorily required to be disclosed under any law like the tax authority, etc., you have to disclose. You may, at your discretion, make portions or extracts of such working papers to clients, provided it does not undermine the validity of the work performed or your independence. So this is what your 230 speaks about an audit working paper. It basically says, A, you have to maintain a working paper. What all should your, in our context, the tax audit working paper contain? It should contain clause-wise data, clause-wise information and explanation, clause-wise relevant books and records data. So that Excel file where you've taken a dump, that should form part of your working papers. Your analysis, your conclusions that you've drawn, your key matters that you wish to speak about, all these should form part of your working papers. Now, additionally, all key discussions that you've had with your clients should form part of your working papers. Conclusions derived by you must form part of your working papers. Audit programs and checklists used by you must form part of your working papers. Now, there's always a question, how do I document this? So I've just tried, I had done this very successfully for statutory audits, and then I did one for tax audits as well. Could be a little dated, so you kindly look at it vis-a-vis the current template. I'll share it with you maybe tomorrow after I get somebody to go through the clauses for any changes once again. Why do these working papers help you? These are the main reasons why you create a standard checklist. By creating some kind of an Excel checklist that I have shared with you, I have actually taken that guidance note on tax audit also and incorporated that here. So an audit is a growing process. See, if you're going to do tax audits, you'll keep doing it every year. So you keep learning a little more. Efficient and effective audit. See, an efficient audit is something you complete on a timely basis. See, the fee is limited. So in 6 days, if I have to finish an audit, I need to have my checklist, everything ready. It's like being completely armed and then going to the war, right? Second is an effective audit. I have mixed these two. An effective audit means I am able to get comfort on my true and correct opinion. And I've got enough evidence for my true and correct opinion. That is exactly what is an effective audit. Efficient is timely. Effective is yes. Okay, clause number 14, I'm dead certain my working papers are good. Complex requirement. Oh, they keep changing everything all the time. There are different decisions, judicial pronouncements. There's a guidance note to be followed. So your risk of material misstatement is pretty high. And in a tax scenario, see, you must be aware, right? There is something called as the fraud triangle. Pressures, incentives, and threats. These are the three things that cause frauds. And in an income tax situation, all three are there. I have the pressure because I don't have the money to pay tax. I have an incentive. I have an incentive not to pay tax because I can take some more drawings. I have a threat. You know, my bank wants a good financial, so I make my tax provision lower. My cash flow is improved. So all these three situations are even more, sort of prevalent in a tax audit scenario than I would think in a statutory audit scenario. And more importantly, you have a regulator who is surely going to look at it if your client gets picked. The fourth is standardization of work. So today, all of us can't do all the work, although we'd like to. So we end up, developing some kind of a system where we work with others as well. But in all this, it's extremely important to standardize work. See, I keep talking about this in the context of statutory audits also. See, 60 to 70% of the statutory audit of any company is the same. Whether it is Reliance or whether it is a small entity, the way you audit a fixed asset is the same. Well, there could be something extra about Reliance, the kind of assets, the kind of depletion or whatever, or the amortize, how they depreciate, the usage. It's fundamentally the same. Similarly, in a tax audit, all the clauses are the same. Whether it's somebody who makes, let's say, ketchup and sauces, or whether it's somebody who makes automobiles, or whether it's a cellular phone distributor, there are clauses which are applicable, inapplicable. So using a checklist like this will help you to standardize work. You say, whoever it is, for clause number 15, I have to see all this. Then it comes the question of delegating work. So today, again, how much can you brief? How much can somebody write down? Instead, you give an audit program, which is a structured checklist, and say you start following this. And then as a partner, I go to review once in 3 days, and I understand what they have filled up and I help them to build. And in this, I think we do have a responsibility to train our articles, because this entire, the tomorrow's chartered accountants are based on the kind of training that they receive from principals presently now. So from these perspectives, a checklist and a document and an audit program is very important to build sufficient and appropriate audit evidence. Now, 3 things, please remember. You need an engagement letter, you need a representation letter, and you need clause-wise checklists. Without these 3, you cannot do this tax audit. You need an engagement letter because the first issue when something goes wrong, somebody says, do you have an engagement letter? Representation letter helps to protect you, saying, look, the client knew everything. The client can't say, I simply signed. The client is represented to you on the various matters. And then you maintain clause-wise checklists. Now I'll go to the second part of my presentation, which is the checklists that I have prepared. These are clause-wise. I can take a short break now if there are any questions. Till now, I think unlikely, but if you have any questions, I'll be very happy to take it.
I allowed all the participants to unmute themselves. You can directly ask the questions to ma'am directly. Anybody, any question? If there are no questions, ma'am will move forward. If there are already questions, you can keep it as well in the chat box also. There are one query, but ma'am said that it can be answered at a later point of time. Mainly, ma'am is concentrating on the documentation part and other these things. So remaining things can be answered at a leisurely. If you have any doubts in the documentation part or coming this one, you just kindly ask the questions. You can unmute yourself. I given the permission. If there are none, we'll go ahead. Ma'am will move ahead with the second part of these things.
Sure. So I'm now here. Yeah. Anyone has a question?
I think there's no questions as such.
Okay.
Go ahead.
So now I'll just
ma'am.
Yeah.
Ma'am, can I ask one question? Is that in kind of COVID environment, like what would be the extent of checking on test basis, because we are receiving information in a very slow mode, or what you can say. So and as we should not compromise with our quality also. So what best we can do as our role?
Follow this checklist perhaps. See, the reason why I'm saying this is you'll have to prioritize. Even in COVID, what you need to do is there are 5 things which are non-negotiable. They are your 5 biggest clauses, 10 biggest clauses.
Yeah.
You focus 80% of your audit effort on those clauses.
Okay.
So using a checklist like this will help you to cut at least 30-40% of your time, and it'll give you that focus to say, this is what I need to focus on.
Like major effective clauses, such as fixed assets or 269 STFs and things like that, which involve major risk.
Yeah. Correct. But it is again unique to every client. Suppose your client has a huge amount of scientific research, whatever, then you have to pay attention to that. See, I've often found that you need to create that mental space for yourself as a partner to say, this is what I'm going to see. And using a checklist helps you because you know some work is happening at the ground level. And today, I think whether it's a small SSC or a large SSC, it's better that, one of your partners who's signing, because unless the signing is happening, the responsibility is also very difficult. It's, that's wherever it's your skin in the game, you tend to take it a lot more carefully. So that's something that's very important.
Right, right.
Now, while some people would think that this, yes, Mr. Yes, sir. So while some of you might think it's an overkill in this particular document template that I've done, I want to tell you that this is the kind of attention to detail that must happen at a staff level, which generally I'm seeing is not happening. So even today, let's say I've seen principals come back to me and say, oh, Priya, I sent a document. They don't even format it properly. Send it back, get it formatted, come back again. So for example, and I also think a document like this will help you to make your instructions very precise, which we are also, there are 4 or 5 clients who are hovering around us and then we don't have the time to communicate clearly. But what you must do when you give such a checklist to your manager or to your article assistant is say, please read each word loudly once in a group session and then start using this checklist. These are things which I have found very, very useful in the way I work. When I give something to somebody, I tell them, you please read it out loudly and then you understand and then you implement. So name of the SSC, ensure that the name is correctly obtained from the documents. In case of tax audit of a branch, the name of such branch should be mentioned. See, these are not big things. What is there if the SSC's name is written longly? It's very embarrassing. That's all. It's a private limited. It's private limited. It's public. It's a company name. You have to get it right. Address. Give the registered office address. If the tax audit is in respect of a branch or a unit. So again, this registered office, tax audit, tax office address, everything, please match it and ensure that you're giving all such addresses. Because another thing, see, a lot of us don't realize this. You are logically expected to have inspected the books and records in this address. So some people, this is something that I like to talk about also. A lot of people start these companies. You've taken a huge advantage of a company, which is a limited liability. But that Companies Act also casts certain responsibilities on you. You have to file your annual return. You have to file your balance sheet. You have to hold 4 board meetings, 4 board meetings. So these are the small things. So sometimes we don't understand. Later on, if there is an issue in this tax audit, this address will become important. Because this is the address where the documents are expected to have been maintained. See, all this tomorrow becomes very, very strong evidence in a court of law.
Take
PAN
the
number
as boon rather than curse, because we keep on asking the questions in the emails or something like that. Really works as a documentation part for us rather than this thing. Otherwise, they might have come to our office across the table. You might have discussed, but never ever put the things into the documentation part. Now
Correct.
that you just ask the queries, your article assistants ask the queries in the email or whatever the platform that you people are endorsed, so that it will give some cushion to you towards the documentation part. What are the things that are not there and all these things, you take it as in a positive way rather than going in a negative way, because we have to accept the ground reality.
Exactly. So here, for example, whatever is the address, the PAN card, etc., just keep it with you. For example, now it says where the SSC is liable to pay indirect tax. You ask the SSC's accountant, he may not even remember. He will say, no, I have this, I don't have this. So make sure you ask pointed questions. Of course, there's no VAT now. GST, CST will not be there. Service tax, central excise, IE code. If any of this is there, please ask them to take the registration. Take one copy, certify. Very simple. How will I document this? Again, I don't need to do this every year. See, again, what is important is your client may have multiple registrations, correct? So for all of my GST, I'll need to have multiple registrations. So for example, I will just say GST is 4.1 to 4.8. Let us assume my client has 8 registrations. So I will just keep, this is my page number 4. This is my clause number 4. So this is kept in 4.1 to 4.8. So let's assume there is an import-export code, which is kept in 4.9. So this completes my working paper. So let's say, for example, it was done by a Pavitra. So Pavitra just writes here and says that's it. Now, if there is something else that you want to write, you can write it right under. You can say in this particular year, they created 3 more new go downs. They got 3 more new locations. Something can be done. Understand the business and profession, and if the entity has not obtained a registration, this is also to be noted. To inquire if the SSC is liable to pay tax.
Ma'am, that
If he
checklist
has,
is not visible to us, ma'am.
oh, I'm so sorry. 1 minute. Is it visible now?
Yeah, exactly, ma'am. Thank you.
So name of the SSC to be correctly obtained. Give the registered office address, PAN number. See here, the question that is asked to you is whether the SSC is liable to pay tax. So it has a slightly larger connotation. So if he is liable to pay tax or ought to be registered, it has to be there. So again, be very clear. If you're in doubt, please write it in the audit report, saying that this is there, but he's not registered or he's registered, whatever. Understand the business or profession and the entity has not obtained. Please note it in the working paper. Auditor has to inquire if the SSC is liable to pay tax. Understanding of the business of the SSC is a must. So today, how do I particularly, even if it's a tax audit, what do I start? You please don't start with the tally. It will give you nothing. Start by sitting with the promoter for just 1 or 2 hours. Ask him what are you doing? So they are the basic questions that you ask. Okay, what is your product or service? What is your production process? How many factories do you have? How many converter locations do you have? Where are all the states where you are registered? What is your turnover? How do you maintain your books of accounts? What is your organization structure? Do you have a GM finance or accountant? Do you have a delegation of authority? Who signs everything? See, all this is very important to understanding whether the data that's flowing into your tally is good data. Obtain a written representation. 100% this should get covered in the representation letter. See, our man quietly has some registration somewhere, keeps a separate bank account somewhere, and he's running a second enterprise without your knowing it. You can't take any responsibility. See, all this has to come in the representation. He has to represent to you saying, this is all as my business, this is all as my registration. So you actually get a class-wise representation. Status, individual, HUF, company, firm, all these you would be experts. Previous year, what is my relevant previous year? Let's say this is previous year 2019, assessment year 2019-20. This is just an example. Indicate the relevant clause under which the audit is being done. I'll try and walk you specially through certain parts. If the firm or association of persons indicate names of the partners, members, and their profit sharing ratios. See, I can only draw parallels from other things which I've seen. In a lot of cases, when we are doing the Schedule 3 balance sheet, persons holding more than 5% share capital should be shown correctly. No, some of us are missing it out. Similarly, if my company has invested in some other company, all that investment should be disclosed correctly. No, that is getting missed out. So such kind of miss out should not happen. If it's a firm or an AOP, the names of the firm, members of the association have to be stated. Normally, what do? We'll see the last year's tax audit report, copy paste here. You may do that, but please check once again that the composition has not changed. I noticed many cases where sometimes companies don't say that they have actually changed their shareholding. There has been a transfer of share. Auditor is continuing to give the same 5% the old people itself, whereas it's changed. Where his representative capacity, it should be indicated. One time at least, obtain the copies of the partnership deed and other relevant documents. Now, next year, you ask to see the latest partnership deed. If it is the same thing, don't take it again. You can just copy paste that PDF from last year's folder to this year's folder. That's enough. Have all changes which took place in the constitution been mentioned? Verify if it is a registered partnership firm, have they given it to the registrar of firms? Whether relevant facts have been mentioned. If in case the share of the member in the AOP is not determinate, obtain written representation. Very, very important. Tomorrow, 2 partners will go fight. And then they come to the institute and they complain. Tell them, boss, I have a written representation. See, some of these small things, see, again, I'm being extra cautious. You don't need to be like this, but please keep it somewhere at the back of your mind that you must trust but verify. So whatever it's it, and anything to rectify after 3 years is difficult. Today, you say, please give me a written representation. See, for example, if there are two partners, in fact, my recommendation is please have a call with both the partners, show them the tax audit report and come. Because sometimes one partner says, I didn't know what was happening at all, although it's not expected of them. If there's any change in the partner's profit sharing ratio, please indicate that as well. Clause 10, nature of business or profession. You have to go through the financial statements, previous year tax audit report, registrations under various laws, memorandum of association, income tax return filed for the previous year, notes on accounts. All these will help you to understand what is the nature of business or profession. See, one thing is to say, okay, he's telling me something, we'll put it in the form. No. I think whatever we write, since it's going to carry your signature, put it correctly. Say the SSC is involved in the following activities. 1, 2, 3, 4, 5. Sometimes, funnily, you may come across something where it is not even there in the memorandum, but our friend is doing that business. And he's a company. Kindly take care in those cases. It's not part of this session, though. If there's any change in the nature of business or profession, please indicate. Whether books of accounts are prescribed under 44AA requires compulsory maintenance by those specified professions, medical, legal, engineering, etc. Now, again, please be very truthful about it. If your client is maintaining, say they are maintaining. Ideally, if they are maintaining in Tally, you have cash book, bank book, ledger, vouchers, etc. Whatever are the books of accounts that maintained, please indicate so. Obtain a list of books of accounts maintained by the SSC at each location. See, please, he's telling you, right? See, again, tomorrow you need to be very confident. Today, if you're doing a statutory audit of a client which has operations everywhere, your audit working paper should include something from a Pune operation also. So that you know as an auditor, I have covered all businesses, I've covered all months in my sample, I've covered all locations in my sample to establish the genuineness of the statements made in your tax audit report. Ensure that the books of accounts specified by the SSC actually exist. And if you want to initial something, you can initial and leave it there if it's very critical. So, in case of computerized records, indicate all such books, quantitative records, etc. Indicate only those books and records which have actually been made available to you. If the client has not given you a stock ledger, please don't write. If the client has not given you a purchase register, don't write. Because if you're not able to generate a purchase register because it's straight away going into stock, let's be very clear. If your client has a particular name for a particular register, put that register itself. MB 51 stock statement obtained from SAP. Nothing wrong. What's a typical thing? Location. What are the books of accounts maintained? I've just given an annexure to this. Whether profits and loss includes any gains on a presumptive basis, etc. So these are your presumptive basis sections. So you're basically telling your article. Okay, see, these all you please go and read. Study the income side of the P&L account. Also refer to the notes on accounts, MOA of the company. Separate set of accounts are not maintained. Verify the apportionment of common expenses. Only the amount of profit and not the amount of income gets stated here. See, these are some, frankly, I'm not an expert, but whatever I thought when I read everything, I said, these are the top 5 bullets, I put it here. Today, when you're trying to do, you must have one combined briefing where you put it on a projector or something. You go through clause by clause and conduct a class for your articles. It will be very helpful to update this template. Similarly, you have clause 13, method of accounting, whether it's cash, accrual, or hybrid. They can say for one particular, so for example, they say, right, all this government incentives and all is on cash basis, everything else is on accrual basis. Where there's a change in the method of accounting, please indicate. So this is very important. So these are the usual things that come on cash: insurance claims, duty drawbacks, scrap sales, bonus, gratuity, dividends. If there's any change in the method of accounting employed, then the impact on the profit or loss. You may take on record the correct clause for this also. Method of valuation of closing stock. Again, please pay a lot of attention to this. You also have an accounting standard impact, your AS2. So please kindly ensure that the stock valuation is properly done. See, and stocks alone come from outside. So there has to be a physical verification. There has to be a valuation, and you ought to have verified it, because that can substantially inflate or deflate your profits, which will directly impact your tax. In fact, if you corroborate it with the new CARO, they want you to give variance by category. Previously, only material discrepancies were there. Now, for this year, they're asking material variances by categories need to be demonstrated. In case of deviation from the method of valuation, then this is your closing stock issues. So if there's anything, kindly go through the same. Conversion of capital asset into stock in trade. So I've just tried and verbalized some of this. Details of the capital asset, date of acquisition. For ascertaining the correct date, the tax auditor will have to refer to the registration documents and accounts. Capital asset, please be very careful. And the date assumes importance for purpose of determining whether it is long-term or short-term. Cost of acquisition, amount at which the asset is converted into stock in trade, obtained written representation. See, 70-80% you may not even have this with most. But to answer the question that the first gentleman asked me, how do you prioritize during COVID? If this item is there, please prioritize heavily on this. Amounts not credited, being amounts falling in section 28, drawback, refunds, etc., escalation claims, any other amount of. So for this, whatever is the class of item specified, if there is an omission which has not been credited to the P&L account, you have to indicate. If there is no credit, get a representation letter saying that I had no such item, so there is no question of credit. All correspondence to be reviewed. So illustrative cases of capital receipts would be capital subsidies, government grants, etc. Please check for these items carefully. Sometimes instead of bringing it to the P&L account, they will net off against the expenses. Check whether that has been done. These are, I think more or less, I'm sure somebody has done this clause by clause. So if there's any land or building which is transferred during the previous year for a consideration less than the value adopted, that I'm sure you're pretty much experts. You obtain a representation, verify the consideration, verify the value of the property assessed or assessable from the registered sale deed. In case of unregistered property, verify the relevant documents. Go to the registrar if necessary and check the guideline value as well. Particulars of depreciation. So depreciation, very important. It's only the block concept in tax. So there is an opening block, the way you calculate it, the rates, the period for which it's been put to use, all that is very, very important. So you must have a separate schedule for at least the additions which are coming in, so that the calculation can be done correctly for the assets. Similarly, ensure depreciation rates are accurate and blocks turning negative should be zeroized. I see this in a lot of cases where people do it in Excel, it's gone off to zero. And then they're showing it, and then, where it becomes zero, you should cut the depreciation from there on. Of course, in income tax, that question does not quite arise because it's WDV, it will never become zero. So this is on assets. So just like that, just to give you an example, I put down each of the points that I think you'll need to cover under the clauses. So I'm talking about purely from a documentation perspective. Amounts which are debited to P&L account. So ensure that the amount spent, 32 AC, 32 AD, 33 AB, ABA, all these sections, eligibility for deduction has to be done. I think I had a annexure also for this. Okay. Okay. So the advantage is when you put each of these separately for your article student or your manager, they also understand that they have to go to the act and read each section. So where it is not applicable, they might just write and say, okay, this deduction, just give a short name and say, this is not there here. Any sum paid to an employee is bonus commission, where the sum was otherwise payable as profits or dividend. Again, for anything, details of contributions received from various funds. This is, of course, integral part of your statutory audit also. So there is a payroll, there is a deduction of the employee contribution, there is an addition of the employer's contribution, and the whole thing is an admissible deduction, provided it has been remitted on time. So that working you have to do and present it. See, these are clauses where you can't make mistakes. You should not make, because it's only 12 months and you can tally it to the salary register. So this is it. Please furnish the details debited to P&L account being in the nature of capital, personal, etc. See, nobody is going to come and tell you, no, this is capital expenditure I've taken to revenue. These are parts where as an auditor, for example, clause 21 is something that's, I hope this is still there in the new form, but kindly check out. Similarly, your clauses which are in it. So these reviews, again, you ought to take it carefully. Whether it is COVID or non-COVID, do a GL review of your tally or SAP and make sure that there is no capital expense debited to revenue. See, these are the easiest ways where somebody will save tax. They'll say, oh, but please remember, capital means enduring value, enhances output. Revenue does not enhance an asset's value. Please be very careful. And for this, you'll have to, these are the usual ledger accounts that you review. Salaries for capital projects, repairs and maintenance expenses, travel expenses, staff welfare, professional fees, contractor payments, miscellaneous expenditure, legal fees, loss on sale of assets. When you go through all this, you will find if there's any capital expense debited to revenue. I'll give you an example. You go and see some payment has been made to a lawyer for purchase of land. Then your client has spent a lot of money leveling that land, etc. It's a capital expenditure. But, they've correctly gone and taken it to revenue. So by looking at this legal schedule, you will say, oh, you bought a land. Have you done any work on the land? He'll say, yes, we put asphalt road fully. It cost me 3 crores. Where is that 3 crore? I've taken it to revenue. No, it should not be taken into revenue. You have to capitalize it. So you just try and use some of these ledger accounts as pointers. Clubs, penalties, violations. Another very good thing is nobody will tell you the penalty. Normally, anything that goes through a large penalty would go through a litigation. So there would have been some lawyer who would have got paid. So these are the reasons why you do these legal fees and professional fees. Everybody reviews all the schedules. Amounts under 40A, I've kept a separate checklist. C to H, I've kept a separate checklist. MSME, again, I've kept a separate checklist. Again, a lot of people don't declare MSME. So, interest paid to MSME for delays in payments, not an admissible expense. The one thing about this program that I'd like to sensitize you is it contains clauses across years. Because a lot of times we end up doing tax audit of a client who's just come in now and it's an old period. So you have to take only the relevant clauses which are there for the current year. Some old clauses may be there. The new clauses will also be there. Particulars of payments made under 40A to B. So again, Obtain a list of people who are covered under 40A2B first. Cross-check this with, it's no longer a 301 register, it's a related party register would be a different register now, RPT register under the Companies Act. So include all payments such as interest, commission, rent, etc. Do not include payments not debited to P&L account which are not revenue in nature. Again, for all this, it's very important that you get a representation. The client first has to tell you, these are the people who are under 40A2B. Then only I can start my work on 40A2B. Deemed to be profits under 32AC, 32AD, 33AB, ABA, AAC. So actually my focus has been on the sections which, the clauses which are not really the sections, but those which are slightly tougher to audit. If somebody says check admissibility under 32AC, then it's very easy. You go see the provision and you see the applicability. Whereas if somebody says P and capital should not be debited to revenue, that's where you do a more audit. So likewise, I have run through every single clause, which I thought was important. I mean, all the clauses actually, and what are the relevant questions to ask. So for example, details of brought forward loss or depreciation. So you take down the records pertaining to the previous year, the notices and the assessment orders, and then you carry it forward and check it. Similarly, your deductions under section 80. Please keep adding this and give it to your article assistant, because then you know for each deduction something. So if there is, for example, let's say contribution for science, research and development, let them fill that number and then you start checking for that number. Then you can check whether the number was accurate and whether the conditions are fulfilled. But putting it together in a checklist like this is really helpful because it helps you to focus. And if it's a nil, it's a nil. Sometimes your client would have forgotten. Whereas in your last year's tax audit working paper, you will find that they've taken a deduction. Then you go and tell your client, no, it was there last year. You please check now. That's a value addition. Similarly, TDS. TDS, of course, you have to be very, very careful. I have worked out a very simple method of doing your TDS. You go to Tally. You take your entire creditors in Tally. Convert it to Excel. It will have a debit and a credit, right? You sort it in descending order of debits or credits, whatever. That will give. So let's assume you have 200 parties. You go and create one column. You sit with your client. You say, who is this supplier? Is he a goods supplier or a services supplier? Your client will tell you, goods. Madam, this is services. This is my lawyer. This is my chartered accountant. This is my professional advisor. These people provide us internet service. Quickly document the whole thing. Why is this very helpful? That means all the suppliers I will classify into goods and services. Now, all the people who are services, all the people who are goods, you go check it with your GST return, he will be there mostly. Then all the services, you go check in the 26 AS which is getting filed. If any party is omitted, where the value is more than 30,000 or 1 lakh or whatever is the threshold, then you start inquiring. So this gives you a comfort that my client is not missing out at a party level. That's a very important check. The second check is your client should never pay directly. Repairs and maintenance to cash, 50,000. That means surely the TDS has gone wrong. So you review your cash account and your bank account to make sure that your debits have not gone directly to your nominal accounts. That's a very important check. These two checks, if you do, and then you sit with the person who's supposed to deduct the TDS and understand whether he knows TDS, this will cover 90 to 95% of your TDS problem. The remaining 5 you can go and check in detail and convince yourself that the TDS has been deducted. I found this to be the simplest way. Go to Tally, classify the suppliers. Finished. Because if your client, see, and look at TDS. TDS is not to my account, right? I'm deducting from my payee only, right? So there is no motive for a company not to deduct TDS and pay him fully. It can only be an error. So when I do this kind of a check, I know they have done it for all the parties. So for TDS, I've kept certain additional checklists which would be of importance to you. This is exactly, take all the creditors as per the trial balance, peruse the cash book, take a consolidated list and then check. In fact, you can even pull in the PAN numbers. And the best thing is if you do this 1 year, the next year you can copy paste the same sheet. You can do a VLOOKUP and pull up the names of the parties. Only the new parties you need to check. Quantitative particulars. Please be very, very careful. If your client is unable to give this information, then it's scary. See, let me give you a small example. Let's say your client is making ketchups and sauces. You have an opening stock. You have purchases. You have closing stock. Your client never records consumption anywhere. Your consumption is your balancing figure. Now, tomato paste to become ketchup, it can lose 30% weight, it can lose 40% weight sometimes, it can you lose 50% weight. There could be a transaction escaping assessment, which is why you need to insist that your person has proper books and records. I bought 10,000 kilos of tomatoes, it all went into the total thing, but that whole transaction never came into GST, never came into income tax. So please be a little careful, and depending on the nature of business of your client, you must ensure that records are robust. This is very, very important. Please pay a lot of attention to these, because actually, while all this, when I used to fill this up like an article, I used to think, what is this? Let's fill up. Only much later in life, I realized that these are all pointers for the auditor to find out if there is a transaction escaping assessment. If something is not tying in, if the numbers are not matching, where did it go? (115O). So I have gone through this clause by clause and attempted to provide details. So with this, I'd like to conclude my presentation, and if there are any questions. So this is just a template. Give me a day or two, I'll refine this a little more, and I will send it back to the chairman. There are also some hidden sheets, which are the erstwhile clauses, etc. So I will align it maybe for 1920 and 2021, and I will send it across. And thank you once again for this opportunity, and I'm deeply obliged. So over to chairman again, and if there are any questions.
Thank you, ma'am. Thank you very much for the lucid way of presenting the things, because, ma'am, try to understand that this part of the area where tax audit being the prime thing, where it is the bread and butter of this Mafshal area or whatever the case may be, but the documentation is becoming a hectic task to done with it. I have seen most of your document. I have followed so many documentations that you are sending for the internal audit, tax, bank audit, and each and everything. I thought of attempting this one as a this thing, and so that we can get a authentic way of documentation part to the this thing. That's why I requested you personally. So thank you very much for making me obliged and things done in a
My pleasure, sir.
way.
And if any of you come to Chennai, please do drop in for a coffee.
Definitely.
I live very close to the
I
institute.
came
So this
twice
is how
to Chennai and to your house also. Thank you very much.
Please.
It's so nice of you, ma'am. Thank you. And
Thank you very much.
friends, is there any questions that are requested to ask to be by ma'am? Otherwise, I'll close the session.
Sunday evening, sir. You should let them.
I understand. I understand about the things. So nice of you. Thank you, ma'am. Thank you very much. Thank you, my